Welcome to the deep dive. Today, we're plunging into a really critical area, the economics of cybersecurity, and we're focusing particularly on emerging markets.
That's right. Our main source here is the report, Cybersecurity Economics for Emerging Markets by Estefania Vergara, Cobos.
And our mission really is to understand the financial side of things, what happens when cyber incidents hit, and why building these strong digital defenses is just so vital now.
Yeah, and the way they put this report together is quite something. They used AI, actually, to sift through millions of online news articles,
Millions. Wow.
billions, plus data from the Center for International and Security Studies at Maryland. So it covers, roughly 190 countries, 21 industries over the last decade. It's pretty comprehensive.
And what emerges from all that data? It sounds like it's, well, quite alarming.
It is. We're seeing a global surge in publicly reported cyber incidents. Think about a 21% annual growth rate.
21% every year.
Yeah. And it's even sharper in places like Latin America and the Caribbean and in upper middle income countries.
But here's the kicker, right? The report suggests a huge number might go unreported. Over 40%, possibly.
Exactly. That unreported chunk makes it really difficult to fully get a handle on the actual economic damage. It's not just one company getting hacked.
No, it affects the whole economy, public trust, everything.
Right. Which is why this matters to you listening, whether
Yeah.
you're in business policy or just, online.
Mm-hmm.
Understanding the money side of cyber is key. How it hits growth, how interconnected these risks are, and what developing nations need to do.
To secure their digital future, build that trust.
Precisely. And just to give a sense of the scale, a key finding is that if a developing country could cut down its major disclosed incidents, say from the top quarter down to the bottom quarter,
Yeah.
it could potentially boost its GDP per capita by about 1.5%.
Wow. 1.5% GDP per capita increase. That's significant.
It really is. Okay, so let's dive into what these threats actually look like. Let's talk about the threat landscape itself.
Okay. Now, the report mentions a big challenge right off the bat getting good systemic data, especially from developing countries.
Yeah, that's a constant struggle in this field. Data scarcity.
Mm.
But they tackled it in quite an innovative way.
How so?
Well, as I mentioned, they used AI to analyze just tons of online articles about cybersecurity across 98 languages going back 10 years.
98 languages.
Right. And that helped them build this unique database, over 30,000 publicly disclosed incidents identified just from the news. Combined with the Maryland data, it gives a much broader picture than usual.
So what does this bigger picture tell us? What kinds of incidents are we seeing most?
Okay, globally, they break it down into two main types.
Mm.
About 61% are what they call exploitive,
Mm-hmm.
so getting illicit access, stealing data.
Right, data breaches and the like.
Exactly. The other 39% are disruptive, just
Mhm.
impeding operations, causing chaos.
Okay.
Now, here's where it gets interesting regionally. Developing countries, they tend to see more of the disruptive incidents, and sometimes these are politically motivated, whereas higher income countries, they tend to get hit more with exploitive incidents, usually driven by, well, money.
So motivations might differ, but is the main driver overall financial?
Overwhelmingly, yes. Financial motives are cited in 74% of disclosed incidents globally,
74%.
and in high-income countries, it's even higher, around 80%. It just shows how lucrative cybercrime has become.
And the damage isn't just contained to the initial target, is it? This interconnectedness seems key.
Absolutely crucial. The report uses the 2017 NotPetya attack as a prime example.
Oh, yeah, I remember that one.
The ripple effect was huge. Consumer losses ended up being over $7.3 billion US dollars.
7 billion. Just from consumer losses.
Yep. That's 4 times the initial losses the directly hit companies reported.
Wow.
And this kind of thing fuels worries about what the report calls cyber runs, especially in finance.
Like a bank run, but digital.
Exactly. A rapid, widespread compromise that could destabilize things. Thankfully, proactive steps by banks and regulators have, kept a lid on that so far.
Okay, good to know. And what about the trend over time? You mentioned that 21% annual growth.
Yes, a clear upward trend globally. There was a smaller peak around 2016, though. The report links that to some political activism, but also vulnerabilities found in the SWIFT system.
SWIFT, that's the big international bank messaging network.
That's the one. So holes there are a major concern for global finance.
Understandably.
And interestingly, they also noted a spike in disclosed incidents right before the 2016 Nagorno-Karabakh conflict.
Suggesting cyber activity can be a kind of early warning sign?
It possibly could be, yeah. an indicator of rising tensions.
Can you give us a couple of concrete examples from the report, just to make it real?
Sure. Take the 2019 ransomware attack on Pemex, Mexico's big state oil company. Estimated losses were somewhere between 25 and 50 million US dollars.
Ouch.
Or also in 2019, that huge data breach in Ecuador. Personal info of nearly 18 million people exposed. That really spurred legislative talks on data protection there.
18 million people, almost the entire population.
Pretty much.
Yeah.
And then in 2020, Banco Estado in Chile got hit with an attack that actually forced them to close branches temporarily. Real-world disruption.
Okay, let's pivot slightly. The report also looks at countries' actual commitments to cybersecurity. How do those stack up against their economic level?
Right. They compare national commitments using the Global Cybersecurity Index, or GCI, against gross national income. And while the gaps are narrowing, especially for low and lower middle income countries, there's definitely still room for improvement.
Where are the main weak spots in developing countries?
Well, legal measures often seem to be the most developed part of their commitment. But areas like capacity building, things like R&D, training skilled people, that tends to lag behind quite a bit.
And are attackers targeting specific sectors more than others? Does that differ between, say, richer and poorer nations?
Yes, there are definite differences. Between 2014 and 2023, high-income countries saw more attacks hitting finance and insurance, and also professional services. But in developing countries, a higher proportion of attacks targeted public administration and education.
Interesting. Public services getting hit hard.
Yeah. And the report even drills down into specific country vulnerabilities by sector.
Oh, like what?
Well, for example, India showed higher incident numbers in utilities, finance insurance, and public admin education. Ukraine saw a lot in public admin, infocoms, utilities, transport.
Right.
Colombia and Chile had more in mining. Brazil, real estate, Mexico, other services. So quite specific patterns.
And there's something called a cybersecurity readiness profile. What's that about?
That's basically an assessment matching a country's exposure level, how big a target they are digitally with their preparedness level.
So high digital infrastructure means high exposure.
Generally, yes. Countries like the US, Russia, the UK, they show up as having high exposure, unsurprisingly.
It sounds like getting reliable data for all this analysis is just a fundamental challenge.
It really is. The report stresses this. Data is often insufficient, fragmented, there's massive underreporting.
Right, that 40% plus figure.
Exactly. And even the data we do have can have commercial biases. A lot of past research focused heavily on the US just because data sources like the Privacy Rights Clearinghouse were available there.
Which might skew our global understanding.
It could, yeah.
So, given all these challenges and findings about the threats, what does